Hello, and thank you for checking out another brief video. Today, I want to talk briefly about the idea of getting money into a Roth IRA if you make too much money. In other words, if you earn over the phase out limitation, which I'm going to show you right now what that is, you can still get money into a Roth IRA. Okay, so let's rewind a little bit and just go into a couple things. First of all, $236,000 for a married filing joint is where the phase out begins. That ends at 246,000. So at 236, it starts to phase out. If you make over 246, it's fully phased out, meaning you can put zero into a Roth IRA in a traditional normal method. That means you cannot fund directly into a Roth IRA like you normally would by cutting a check to the vendor and allowing it to be deposited into the Roth IRA from a traditional normal standpoint, like you would anything else, like you'd put money into your savings account or checking account or insurance expense or anything else that you might have. Okay, so let's kind of rewind back a little bit more and talk about why you'd want to use a Roth IRA versus a traditional IRA. Most of you probably already know this if you're this far into the video, but if you expect, first of all, if you want to pay the tax on your harvest, you want a traditional IRA, okay? If you want to pay tax on your seeds, you want to pay tax on your input, you want a Roth IRA. This graphical depiction over here just helps us to understand that. If you expect to be in a higher tax bracket when you retire, you are going to want a Roth IRA. Like I just said, if you want to pay tax on your seeds rather than your harvest, you want a Roth IRA. If you think you're going to be in the same or a lower tax bracket when you retire, right? So that's the sales strategy behind saving for retirement in a pre-tax plan. If you think you're going to be in a lower tax bracket in 30 years, 40 years when you retire and you're no longer working, then you would want to fund a pre-tax retirement plan, because when you retire, your income's going to be less. Henceforth, you're going to pay less taxes. That would be this column over here in the red. That is when you would want to use a traditional IRA or a pre-tax 401k at your employer. Again, if you think you're going to be in a lower tax bracket or higher tax bracket, that is the crux. That is the decision methodology that you should use for which ones of these two things make the most sense for you. Just a little quick tip or insight that I would add at this point. Balance is important in finances. Okay, I cannot tell you how many times myself personally or clients that I have worked with over the years have changed their thoughts on how much they will make in the future. And the tax brackets are constantly changing. So there's a lot of moving parts. There's a lot of variables to this decision. We encourage people to keep in mind balance when they're dealing with almost every financial decision that they could deal with. And we think this is no different. We like to see people have balance in their way of thinking. We also like to see people have balance when they get to retirement and having diversification amongst the three tax buckets that exist in our marketplace today. I'm just going to explain those really briefly, and then we're going to wrap this up. The first one is pre-tax. That's pretty simple. We've talked about that. If you think you're going to be in a lower tax bracket when you retire, that makes sense. The second one is post-tax or after-tax, meaning you use a Roth IRA and you pay the tax up front rather than at the end. The third one is non-qualified. Okay, that would be like your home or your not really your home, but your savings account or a investment account that you have that doesn't have any tax benefits, but you pay on the growth of that account each year when you get gains on the account. Most of us, if you make that much money, you probably have a sizable amount in your checking and savings account. That checking and savings account typically earns interest. At the end of the year, you would get a 1099 for that interest. That is a non-qualified account. Okay. We like to see people get to retirement and have about a third of their assets in pre-tax, about a third of their assets in post-tax or tax-free, and about a third of their assets in non-qualified monies. Okay. That means you give yourself the maximum amount of optionality when you get there. If there's some years where you're going to make less money, maybe you'd pull more out of your pre-tax bucket. If there's some years you're going to make a killing and have a really good year, maybe you'd pull out of a different bucket, right? That gives you the optimum amount of flexibility as an owner of these assets to be able to control when you pull things out. I can tell you one of the biggest things that affects people when they get to retirement is inheritance. Sometimes you don't have control over what you inherit and what type of tax structure that's in. So that is another reason why we like to see people have balance amongst those three when they get there. If you have any questions about how this works, we can help with this. But in short, to fund a backdoor Roth IRA, you simply put money into a non-deductible IRA, which kind of functions more like a traditional IRA, but it's non-deductible. That's the key. Then you simply convert, after that money is in that non-deductible IRA, you convert it over into the Roth IRA. If you do this properly, you will have successfully funded a Roth IRA without any income limitations. Again, going back to point one, there are no income limitations on a non-deductible IRA. So you can put it in there no matter how much you make. You can make $1 million. You can stick it in there, and then short time after it's in there and everything is settled, you can convert some of that or all of that into a Roth IRA, accomplishing the net result that you wanted in the first place. Why the IRS has it structured this way, I'm not exactly sure, but I don't make the rules. We're just trying to play by them, and I'm just trying to help educate you as to what those rules are. If you have any questions, hit us up. Thanks for watching. Have a good day.